Good morning, everybody. I'm Doc McGraw, and welcome to my SPX Daily Plan, where we talk about all things markets, all things SPX, and other underlyings as well, and try to get a feel for what's coming down the pike. And today is an interesting day. We're going to be talking about quarterly options expiration. Hold on, let me fix that. We have the large Q1 options expiration, and so that's important. And what that might imply for the road forward, and I'll be writing a more detailed piece about that over the weekend. So click like, subscribe, and you'll get that. That piece will be available to everyone, and of course, there'll be maybe a little premium section coming out as well for our premium subscribers. Anyway, so here we are. So let's take a quick look at the tape. And before we do a review of yesterday, let's kind of look at the overnight. Because in the overnight session, where are we? We kind of bounced up. Where is it? Over here. Okay. We kind of were bouncing up near that near the 6620 area. We were kind of struggling with being green to flat. We closed at 66 something, 6602. I forget what it was, 6606. Then some news hit the tape. It looked like Iran-related news, signs of escalation. Oil popped. Also, I saw some ECB shattering. So I'm not sure exactly what got the algo overlords, panties in a twist, technical term. But either way, we kind of dropped, stabilized, right at my line in the sand. And we'll talk about why I think 55, 60, 50-ish, always draw your lines with a magic marker, is the, that's how I draw mine, is a line in the sand. And I mean, you don't have to be a TA guru and write 16 books about it to see that we bottomed here, we have a lower bottom, I think, in the futures in the Sunday overnight session, maybe not. But there seems to be a bottom, maybe, if we want to use regular trader terms, price acceptance down there, or value area, whatever, however you want to look at it. My former TA mentor, I'm a recovering TA person, said, look left. Get all those squiggly lines off your chart, look left. So anyway, with all that said, right now we're bouncing around the 65, 85. And if you remember, we kind of hung around this zone a lot yesterday. We had 65, 60, 65, 80 as one zone, and 80, 60, 600 the other zone. And that's kind of where we chopped around, and that's kind of where we're chopping now. Okay, let's do a quick retrospective. And some things that I think were important. Okay, so first, what I said, SPX closed down yesterday, 0.3%. However, and we'll get to this in a minute, VIX was down as well. Also, and it's in my note, gold was down, risk assets were, those risk-off assets were down, Bitcoin was up. So signs of reversing things, maybe. Skew was down, the demand for downside convexity was down. So is this the beginning of a bottoming? Kind of, are we much closer to the end of this than the beginning of this? Am I saying that this is the to the dime local low? I'm not saying that, but maybe. Oh, thank you. Breath did not make a new low, hence the bottoming. So there's all these, structural factors that seem to be smelling like the low is in. Of course, if something blows up in Iran, whatever, then there's a big narrative shift. So thank you for pointing that out. I didn't check breath yesterday. I checked breath, just looked at it, but I didn't really see what the oscillators look like. Thank you for pointing that out. So we have all that stuff going on. We actually printed green yesterday for a couple of minutes from that ugly bottom in the pre-market. And so, we might be seeing some green shoots. Okay. We briefly reclaimed the 200-day moving average. Being old school, I like moving averages, simple moving averages. 200-day moving average is a simple reference point for uncomplicated, asset allocation strategies. I don't know, your Fidelity retirement account type people, or I don't know, whatever. 200 is an important reference point, and so I keep my eye on that. More important shift was intraday behavior. For 1 second at least, the market stopped acting like it had to sell every bounce and started behaving like it wanted to buy the dips. Another thing that happened was throughout the day, the volatility indicators, like I said, VIX was lower, and so was the SPX. The VIX 9-day, which is a near-term fear, was still up a little bit above the VIX, but was down more than the VIX on a percentage basis. VVIX had the volatility had a little spike and drop. So everything was pointing to some kind of, okay, dude, we're overhedged enough, the market is saying. Now, caveat emptor, as they say. We have options expiration, the quarterly today, like I said. So there was also some rolls. So some of that closing out of positions was rolls into April and June. Didn't see many rolls to May. So how much that plays into it, that's why I said later. I know I want to see confirmation on Monday, Tuesday. But we have been seeing this pattern, broadly speaking, of convexity being sold. Okay. Expensive downside puts being liquidated or not being bought, whether liquidated or not being bought. Okay, so that leaves 6,600 as the main OPEX pivot to the upside. Still meaningful positioning there, and we have 6,700, 6,500, kind of like the bigger frames. Pencil in 64.75, the JP Morgan collar as your downside reference point into the end of the month. That's another kind of mental pivot. And now we kind of have the lay of the land. Okay, overnight Globex, we talked about earnings and nothing much today. Big deal today is MOPEX. Some minor data, housing, inventories, whatever. Macro, Middle East headlines. I forgot what the headline was. There was some headline. ECB held rates unchanged yesterday, but there was kind of a little bit of a hawkish. That was what I was seeing, hawkish banter. Nothing really much going on the earnings front. Levels and lines. 200-day moving average, 66.10. I marked that. The expected move when I looked earlier today was really wide, was 60-ish points from 65, 60. It's probably come in a little bit now to 50, 55 points. And we're at about 75, so 25 top, 25, 20 bottom, somewhere in there. Okay, let's switch gears to gap exposure. Now, a couple things to be aware of. I'm not going to talk about the AM expiry. That's going to go bye-bye. I think the AM expiry suggests a close in the 80, 90, 75 area, pretty much where we are, which is why we're inching there at this time of the day. I think we probably close a little higher than where we are now. I think I have to go back and check. But here's what's sitting in the PM, and I'll show you the boxes in a minute. 6550, round number, not much there. 1,000 contracts, so it's enough to matter, but not matter as bigly as 6540. Why 6540? So yesterday, near the top of the day, somebody came in and bought, I don't know, $10 million worth, whatever it was. I think it must have been Chewy. Bought $10 million worth of 6,500 something or other debit spreads. I think there might have been 6,500, 6,510s. I'm not sure why this is showing here, unless there were a bunch here that got all bought up that the market makers gladly sold to this guy. Or these got bought. I'm not sure what happened here. But either way, 6540 is my tell. That's my downside pivot for the day. I mean, so if we break 6560-ish, we could have a pretty fast acceleration down towards 6540, and maybe through undercut and reclaim. Let me get back to the chart. Oh, I'm at the chart. Undercut and reclaim. I would think, since this was seems to be a discretionary trade that came in at the end of the day near the high, that whoever spent the 10 million bucks is going to cash out at 15 million or whatever it is. We get a reversal. I'll be watching for that flow. I don't have a crystal ball. Maybe they want it to go all the way down. We'll see. I don't suspect that that's going to happen. Okay, let's get back to the structure. Okay, so below the 6540, 6500, there's a nice chunk of inventory down here, 5,000 sold puts. I'm thinking that's going to hold. VIX goes flying to 30 plus, whatever. Now, depending where we are, if this stays, we're in this zone toward the end of the day. Storm favors this decaying, pushing us down, and this market makers buying and selling into a pin near here. I don't expect that to happen, but that's just another if-then scenario on the back of your mind for the end of the day. So the main zone is in here pretty much like yesterday, 65, 60, 50. Here's the 60 right here. That's kind of a reference point. And 6,600 is kind of what you have to get, the bulls have to get over with, kind of like a resolution here, two-way ladder chop. Really, if you want to make a big ladder chop, 65.30 up to 65.95, somewhere in here, it's choppy. We have some reference points. Over 6,600, the tone changes. Some might say we would be in a positive gamma, not really regime, but zone. I don't like the word regime. But we still have a fishbone pattern up above 6650, probably a bridge too far. We then have these boxes saying that we shouldn't go above here. Just think to the right, support resistance. To the left, magnet choppy. And if you don't want to worry about the theory behind it, you don't have to. If you want to, you can. Okay, just keep it simple, stupid, as they say. Et cetera, not going up here. And that's basically it. Oh, yeah, I wanted to show you something else. So those of you that watch regularly might remember that I like to look at this every week. This is a weekly expected move. And crappy as this week was, look at that. We held the bottom of the expected move. We held the top, surprisingly enough. And we're just kind of spinning right in the middle. So we'll see what this weekly expected move prints like. Interestingly enough, the bottom of the expected move was 64.7106 for who's counting the pennies. I'm counting it near the JP Morgan collar strike of 64.75, my mental reference point. As implied, battling historic, and we've been getting a spike in realized vol again. And so this picture is still muddy, depending on your look back. This is a 10-day look back. If I go to a more conventional 30-day look back, and let's just take a look for fun. 22-day would be a month look back, but I'm going to go with 30 because it's 22 trading days roughly in a month. Let's just go with a gentleman's 30. That's even worse because we had all those shitty days. So,
Doc, I have a question.
Yes.
Yesterday, I don't know if you noticed or if any of you all noticed, we were missing a couple strikes on SPY. Can you mind sharing why that happens? We were missing, I think it was like 654 to 650 or 651. Do you know why that happens, or like they're just gone on the brokers?
I know I can speak to when I've seen that happen for SPX. I would imagine it's the same or similar. And it's something as simple as, whoops, we screwed up.
Okay.
Well, I actually saw the letter that whoever sent to the CBOE. Somebody sent to the CBOE. I forgot when it was sometime last year, like some stripes through a skip. And somebody sent an email, whatever, to CBOE. And it's, oh, shit, we forgot. Sorry. So it's something as simple as that, kind of funny. You would think that was something, as, well, like the world hangs on this, that they would have their shit together more than that. But apparently they don't.
Yeah.
Go figure, right?
And what does that mean? If you hold that, like, let's say you bought the option on Wednesday, do you still own it?
Yeah, you still own it. The discrepancy now exists for IWM and QQQ. Yeah, you still own it, and they have to somehow make good.
Okay.
They have to somehow make good. That'd be an interesting discussion. I'd like to be a fly on the wall on that one.
Yeah.
Especially if, like, an institution had like 50,000 of them. You know what I mean?
Mm-hmm.
But thank you for bringing that up. I like these little nuancy anecdotes. And so we'll see where this prints out. I'm going to do my regular weekly, sell some iron condors or some broken wing flies, whatever, up above and below. I kind of leg in a little bit over the day. And I use this as a reference point all week long to kind of build these out. Usually by Wednesday-ish, I'm out of the first, even the second tranche. Take them off at 50% credit, 65% credit, whatever. I might add to them on pullbacks or reposition a little bit. Non-investment advice, guess what I do? I also like to trade flies around them. I like that. I like this. It gives me all kinds of stuff to play with. And we have Val here. Good morning, Val. So anyway, so I guess I wanted to show you guys that. Let's take a quick peek over here. I guess want to get a feel for what the EM is now. About 60 points still. Okay, so 60 points still if we believe Tasty, which take with a grain of salt. So 60 points here. seems pretty wide. That's like 60 points from 90 is 30-ish at the bottom. And 60 points from 90 is 50-ish at the top. That's pretty big. That's pretty big. So we'll see. We'll see. Don't sleep on upside. That's all I'm saying. Don't sleep on upside. Everybody's got their eyes watching the floor, so that's fine. Don't sleep on upside. However, going into the weekend with a chance of escalation over the weekend, my take, now that I'm a geopolitical military strategist, I'm no longer a virologist as I was during COVID, nor am I a constitutional law scholar as I was when we were impeaching Trump. Now I'm a geopolitical military analyst. And it seems to me that Trump likes to escalate over the weekend where the market, whatever, will just kind of say there's a Machiavellian thing that he times stuff to the market. Maybe he does, maybe he doesn't. Who knows? Doesn't really matter what I think. That seems to be what the pattern is. I saw a tweet yesterday that actually got the market excited, where Israel said something like, typical, we have them degraded, we beat the shit out of them, they can't do anything. And something indicating that, like, we're going to need to go in with ground force. Oh, yeah, he said that the nukes are gone, and they can't enrich anymore. That's done. But we might need to go in, or we're going to need to go in on the ground to clean up whatever. Trump's been hinting that. So if there's some ground action this weekend, Mark, we might get another one of those Sunday overnight dumps. I don't know. I'm not saying there will be. I don't know what the action's going to be. Headline noises that Trump wants to take Krog. Let me say thank you. Where we're at has 90% of soil capacity. Yeah. And that's been the noise for a while. I saw some recent noise, I guess, echoing the same noise. And so if that happens over the weekend, the market, who knows how the algos are going to take it. And so that's kind of why I don't know that we're going to get the same typical vol crush or loosening of vol into Monday over the weekend. We might. It just depends where we are. And I'll reserve my comments on what I think we should do for the chat room where we can get into arguments. Not arguments, discussions, spirited discussions. Okay, I think that's it. Oh, yeah. One more thing. As you guys know, I've been enjoying going down the weeds with you on this. No, not that one. Where is it? Where's the decomposition index? I have it here somewhere. Oh, don't make me. Here we go. This is what I was talking about. Without getting too deeply in the weeds, SPX down 0.27%, VIX down 4%. Usually we would expect it to be up about 0.25%-ish. Sticky strike, the shift just because of the volatility surface moving down 0.1, not really that much attributed to that as much as it actually went opposite the direction. The parallel shift, the repricing of volatility, the price of beef went down, put skew went down, call skew went up, downside convexity went down. So there seems to be, I don't have this charted, but there seems to be this tendency over the last period of time. So that's kind of what's going on in the vol space. And as usual, I call bullshit on the fact that we have VIX higher than, okay, one more observation, and I'll turn the mic over. I guess we'll just go where I got so many charts. Okay. And this is not the display. Okay, this is good enough. Um, we've been seeing when VIX opens, that's on the daily. Okay, I'll leave it alone. When VIX opens higher than the VIX futures in the morning, and we kind of have that little morning VIX jitters. Like I think I said before, we tend to pull back a little bit, form a low, volatility starts lightening up, whether you're looking at the VIX 9-day, the VIX, whatever your favorite skew, the way vol trader looks at it. And then that release of vol or failure to realize vol then gives us that mechanical bid, and then people with their lines on their charts and the high frequency traders start jumping in, et cetera, et cetera. And we've been getting that path up. Au contraire, when we've been opening up kind of a little bullish, we've been kind of seeing the reverse pattern. So that's kind of my broad observations. Yesterday, I did an update intraday with updating the levels and updating the charts for my subscribers. I thought that worked out pretty good. It was spot on, if I say so myself. I put it out on Twitter as well. And so with that said, I'm going to turn the mic over to Chewy.
Sorry, guys, I was muted. Let me pull up my chart for you guys today. Before I get into anything, I just want to let you know that I feel like after all my journaling and my logging, OpEx is a hit or miss for my edge. So just kind of keep that in mind moving forward. 1 second here. Just keep that in mind moving forward. I will be trading.
You journal. This isn't just magic automatic.
I journal everything. And to be honest, I journal my losses much more aggressively than my wins, because I care more about protecting my account than I do making money.
Now, do you teach that to people?
I do, yeah. And if you're in the beta, we'll definitely get into that over the next few weeks as well. If you're interested in learning how to do things like I do, guys, ping me. Definitely would hop on a free call, see if it's of interest to you or if it could benefit you. All right, well, let's get into it. My range today is from 66.75 down to 66.15. I got a pivot at 6660. Currently holding below pivot, already bounced from our floor. Like to see us hold above pivot and then take a trade from there to our ceiling, maybe a small little reject. I'd really like to see this thing kind of blow up in the morning. I think if we start pushing in the morning, we'll have a nice trend day to the upside. It's OpEx, like I said, so take that with a grain of salt. If we hold back below pivot, I'm not going to be so aggressive to jump into shorts, because that is.
How far down is pivot from here? Roughly how many points?
Pivot is about 15 points from here.
Okay.
To the upside. We're currently below
it. Okay.
If we hold below pivot, I'm not going to be so aggressive to get into shorts, simply because I do have it marked as a sticky level, and we could just chop around there for some time. So I'm not telling that, I'm not getting that as a tell that we're in shorts and we're in longs right out the gate. I'll believe the upside more than I'll believe the downside, but we'll see if that bias hurts me. If we hold above the ceiling, I think it'll be more of a grind, and these reject zones will be better used as take profits than actual sell-offs. But if you're not a trend trader, then trading the downside at these zones will be, I think, pretty good if you're quick at taking profit. Now, if we hold below that floor, then I'll definitely be excited to take shorts, and I'll probably skip the bounce here, although we could get something there. But I'll be looking more for the final target down here at 65.30. Again, I'm a little bit more bullish going into today's session, especially after yesterday's pump end of day. But I'll stay patient. I'll definitely be sizing down. If anything, if anything, I might not even take a trade. We'll see.
Okay, great, thanks. On here it's just an ES version of the chart with the ES strength. I like to make the words a little smaller. So your upside pivot on my variation of it is roughly, is it 66.50-ish in that area?
Yeah, 56 exactly.
Yeah. So this is an example where the gamma and the price action, we'll call it, overlap, which then gives us a little more confidence in how to trade the levels. I'm not saying that you can't be a TA level trader. I use the TA to kind of tweak my gamma framework. A lot of people use their TA that got them to where they can be full-time traders or make money trading, and use the gamma to tweak their TA, potatoes. I don't care if you use astrology charts. As long as it's working for you, this is something you can overlay. Okay. So that said, let me get back to SPX, and let's see what Val's got in store for us. Always something interesting from the Val trader.
Yeah, hi, good morning. Before I go into it, just to make sure I understood that the tool that you use from CBOE with the decomposition. Just one question about that. The sticky strike
Yes.
represents how much did the IV per strike moved when the spot moved?
Correct. So the sticky strike is the shift because of we went up or down, and the
Yeah, so let's
parallel
say
is the
we went
repricing.
down, let's say we went down 20 points, and basically we got the same IV at that strike before the 20
Exactly.
points drop.
Exactly.
Okay, I get it. Okay, it's just the terminology, sometimes.
Yeah. It took me a while to get used to the terminology, and there's a good but boring ass paper that's associated with it on the website,
Okay,
on the
let me
CBOE
share
website. It's like a
the
25-page paper.
let me share the screen.
I'll send it to you if you want in the Discord.
It's within that page from the CBOE.
Yeah, it's within that page from the
Okay,
CBOE.
so
Let me show it.
no,
Let me show
no
it
need.
to everybody real
I'll
quick.
make do with it. I'll just go into the page and check it out myself.
It's right here. See that, everybody?
Yeah.
Fixed decomposition index.
Yeah.
There's a whole white paper write-up.
Yeah. Well, I was just curious about
Yeah,
how to make sure I understand when they use other terms. So that's all.
exactly. Yep. That's what you got to do. Exactly. That's what a
Okay.
pro does.
I'm streaming.
Okay, let me get my stuff off. Wait, hold on. There you go. Take it away.
Okay.
And
Now,
that's
first
my
of all,
server there, you see, folks. Our server.
yeah, I'm gonna utilize that channel you did for me in the server. I'm not on my machine today, and there is some issues here with the mic. So if I get disconnected, I apologize. But let's get started. So first thing first, what is interesting here, obviously, we're hitting the. Are you seeing the trading view thing?
Yep, perfect.
Okay. So first thing first, I noticed this yesterday in the analysis, so I just want to recap this. We're hitting these multi-months, almost 5-6 months of support levels here. between SPX 6600 and 6500 kind of. And obviously we're meeting those same levels with a much higher VIX. The floor, in my eyes, of the VIX now is that 22 handle, which it's pretty obvious we're finding support on that 22 handle VIX, right? And but also important to notice that while we are a bit lower than the low from March 9, VIX is kind of the same level from where we were there, right? We had that big reversal bar here, but if we look one day before, we were much higher on the VIX than where we are today. Yesterday, we also had a kind of a spot down, VIX down thing. So people are holding on to this support as of now. And I'm constantly finding evidence that for some reason, they're utilizing this high VIX and this support to actually build some long positions into the end of the month. That theory is still there. I continuously find evidence for it. I can show you one piece of information here that I collect on my end. So this is an Excel with various types of analysis I do on the file that I get from the OCC. We're looking here at data that doesn't use today. So we're looking only at March 23 to March 27 next week. That slice that came this morning as part of the data, we can see that the delta change between yesterday and today is pretty bullish in terms of the ratio. On the top right corner, you can see the delta change in the calls versus the delta change in the puts. So the calls added 62 million or so delta to that portion of the date complex, and the puts added only minus 40. So this is based on the close of yesterday and the clearing. Also interesting to see is that they are clearly hedged as a bulk between 65.85, 65.75. That is like their line in the sand to the downside. So they are bullish. They did close a bunch of in the money puts, but they added this hedge, which is the lows that we're tinkling with the last couple of days. So in my eyes, this makes it very easy to draw the line where the market becomes more bearish towards where the market is has constantly a potential to the upside. Now, it doesn't make me bullish in the sense that, I'm just going long naked, but this is something that I'm seeing every day this week. So we all know what's going on in the background with the war and everything. And while people are holding a very high bid, well, not a very high, but a high bid on the VIX, right? When the realized vol is much lower. So they're like paying, it's like it's friction, it's going away, right? That premium that you're holding is losing money, and you're not getting that realized vol. And on the other hand, these positions continue to accumulate to the upside for next week. Now, specifically next week, this has been done throughout this week. They continuously add, every day they inch a bit more upside exposure towards the end of the month. It's as if the market either has information or is expecting that following the weekend, in a couple of days, tomorrow, sorry. So I'd say by Monday, the market is expecting some type of positive development, right? It doesn't mean that the US goes back to home with all its assets, but maybe it reduces its aggressive strategy and goes to a more dedicated or moves strategy, anything that will be perceived as de-escalation. So the market is like expecting something like that, or maybe someone has information and he's stealth buying those positions to the upside. knowing that this de-escalation, whichever form it comes in, will be announced either by the weekend or by Monday, right?
On a less Machiavellian note, it
What?
could simply, on a less Machiavellian note, it could simply be we're unclenching and volatility and positioning suggests that we should go up regardless.
Well, I don't know if volatility necessarily suggests that. The VIX is continuously higher. It does do several spot down, vol down days, but we're not getting the general upside that we used to have on any other occasion where the spot is down and vol is down, right? We don't get that. What we get is like a strong floor, but we're not getting any upside. People are not jumping and saying, well, I have to buy NVIDIA now, otherwise, who knows how I'm going to catch that up.
That's why
On the
we're
contrary,
looking
I
at
think
Q and unclenched. That's why we're looking at the unclenched for next week.
yeah.
And
Anyways,
that's the way I'm looking at it,
looking at the 0DTE, what I'm seeing is the following. I noted this early on. Anyone that wants to follow my stuff can just jump into this channel. I generally start pretty early. So today I started 2 a.m. Chicago, and I mark it with the date. What I was looking at that point was 66 to 66.90 as a transitional level in the Globex. We did get a bounce off that, but later on broke it. Right, we got this bounce right off that level. Try to hit that yesterday's high, and then got reversed. Probably some news or something. I don't know what came in. The plain vanilla OI surface has this clear, huge put position here on the 0DTE. Sorry about the date. It says March 19, but it's actually today. And we are still put dominated, 6,600 and under, totally put dominated, like barely calls in terms of open position. To the upside, we have a bunch of in the money puts all the way up to 66.50, those purple bars at the bottom. But we do start developing, we do go from a total put domination to something a bit more balanced. And as we go up, specifically above 66.50, we get more and more call dominated. Now, I don't really have a bias. Just like yesterday, I'm open both sides. I actually bought 2 flies today for 55 cents. One is centered around 6660, and one is centered around 6520. Let me check that. 6520. Yeah. So I found it kind of strange that it took me an hour to get filled on a 55 cents on both of them symmetrical, because I was pegged to the bid. So I was like always the bid. I didn't pay the spread. So somebody actually hit me, and on both sides. And that kinds of feel strange in the sense that, yeah, you can say maybe the market is undecided, but on the other hand, I think that the IV as of now is a bit high. So like the market might not like the market might stay within a tighter range than the actual expected move, maybe. Like it's more like a feeling. I can't really back it up with anything else. But I have those 2 edges, and that alone shows that I don't really have a bias. I can see both sides being, the market trying to push the 66.40 to the upside, maybe, and can easily drop to 55.60 like it did yesterday and today, and maybe lower. Now, looking at some of the models, this one specifically, this is the mean reversion potential. I don't know if you guys remember, but yesterday it was the opposite. We had the higher levels of the red chart to the left, meaning that if the market were to go down, we would bounce back up. That is exactly what happened. We went down 65.60 and bounced all the way back to, I don't remember, 66.40, right? Today it's the opposite. And as you can see with the arrows, if we were to go up, the maximum potential of the market for today would be into those 6660, 6680, and then I would expect it to actually mean revert all the way back to transition, which is around 6620. To the downside, we have small supports, which are basically the same levels from yesterday. If those will be broken, then we just drop to 5520, pretty much like a stone. So that is one thing. The other thing I saw, which was also evidence that support that compression to the upside and mean reverting, is the candy wrap. You can see that it starts to compress 6660, right here, 6660 starts to compress, and it gets more and more compressed to the upside. So obviously, only really good news can push through these levels, and if they do, either way, it's a short signal into the Globex. So the natural upside spike could be towards 6660. That will be easily reached if things get positive today. More than that is a bit, it needs a bit more traction. To the downside, we can see that we start to compress at 6520, even 6525. So again, the main theme for today, expected move a bit large, 50, 60 points. The fact that I got both flies on both sides is suspicious, right? I mean, the market makers know what they're doing. So I guess we might not realize that without significant news. So
where were your centers on the flies? I'm sorry, where were your centers on the flies?
So I posted them
In the channel?
to the market. I posted them 2 hours ago, I think.
Okay, I'll take a look.
Yeah, I got filled maybe an hour ago, but I got so centered. These are 15 wide, both of them centered 6660 to the upside and 6520 to the downside. Both of them 15
Okay.
wide, both of them for 55 cents.
Not bad.
Okay. Now I didn't get them simultaneously, but I did get them, let's say within the same 30 minutes, right? So like,
And that often happens, even more so in the overnight session, but even intraday, you get it on the wiggles.
yeah, okay. You have, I'm an aggressive directional trader. I don't do flies most of the time. It's just because I don't really have a bias. You have more experience. Still, I thought it was a bit strange to get both of them, and that generates like a feeling that we're not going to realize either one. Like we're not going to do that and all that. That's about it.
Okay. Hold on, I'm trying to do something right here. Just getting something ready here. Okay, so once again, we're running late here. Just want to take a quick peek. Where are we now? We're at 85-ish, kind of where we were kind of topping out yesterday a little bit before the 60-80 range. Let's see. Speaking of flies, and speaking of everything else. Okay, so that looks fine to me. I'm willing to add 64.55 below 50, even better, but there's no juice there. I already have a fly long the 65.40 in the other account. When I saw that big trade come in, I did a 40, 30, 80 fly. That's nice and green now. I might take it off. We'll see. Let's look at an upside fly while I already have a downside flies. But let's just see what we would look at for the downside, or what I would look at. I'd want to get the acceleration toward the 40. So I think it might be something as simple as a 55 for 80 cents. That looks pretty cheap. I'll try and steal it for 75 cents. And to the top side, so 55, 40, 25, or you might slide it down a little bit if you wanted, if you think it's going to go through the 40, 50, 35, whatever, depending how you like to play them. And to the top side, I don't think it's rocket science to figure that 6,000 should at least be a Stolly reference point. And so where do we go? Let's see, 90, 05, 15, $1.60. See, I'm a cheapskate. I don't like to pay $1.60. So if we do a 10 wide to start, $1.20. Well, for that price difference, I'd rather go a little wider. I'm gonna actually see if I could steal this for $1.25. I'll come back in later. Now I might shift that up a little bit. On top, I'm not chomping at the bit to sell calls, but if I can sell something up here at whatever, 95, and something like that for 45 cents, I would do that. Not investment advice. If you like something tighter, maybe 70, 80, or even 65, 75, somewhere in here for 45 cents, 40 cents. Let's play another tight one at the bottom. I know I got people that like the tighter spreads. I can get below 6,500. That would be nice. That's not horrible. Let's see if we can slide this down. Get away from that big round number. Yeah, something like that. 80 cents. Put it in for 80 cents on a 5 wide, and then you can shift it around. Okay, so I'm putting those trades in, and like I did them yesterday, and I put it out on Twitter, whatever. All the trades that came in yesterday, the Iron Condor filled at whatever it was, 95 and closed at 35, roughly a third the width of the spread. The put fly that I put in closed at 55, I got it for 85, et cetera, et cetera. Whatever put spreads I put in closed at 15 cents. So everything closed the way it was supposed to, quote unquote. Will that happen today? I don't know. We'll see. Not investment advice. That's what I do. Okay, everybody. Thanks a lot. We have 6 minutes. Hope you make some money. Take care, everybody.
Good luck, everybody.